Should I sell my stocks before a crash? What is the right way of approaching a market crash? Industry expert Ms. Amrita will enlighten us now.
If you can really time it, then well and then fine. But data suggests that people don't time it that well. As I've said, the tenets of asset allocation, seeking the help of a professional financial planner, because he will be reviewing your portfolio in conjunction to a goal, and he will look at allocating your money into multiple asset classes in a proper, well thought through percentage, like equity 50%, debt 40%, gold 10%, whatever. I'm just throwing a hypothetical number and may not be the right number. And he or she will rebalance it accordingly. So obviously a financial planner, before a market crash, if the equity valuation has moved up beyond a certain point, say a 10% trigger level, he will automatically rebalance it. Which is that take the excess gains out of equity and put it into some other asset class. So better to consult a financial planner and do rebalancing basis something called strategic asset allocation. So that is what should be done. But if you have the capability to ascertain a crash and take out of the money before, and then go ahead and do it. But not many people have that capability.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.